We do have Goldman earnings coming out now. So earnings look like a beat, $3.95. Estimate was for $3.44, but the number is FICC, coming in at $1.16 billion. That is well below estimates and well below what we saw in the previous quarter. $1.16 billion for FICC, so that's going to be below 25% year on year. The other big headlines here: investment banking revenue coming in at $1.73 billion. That's a beat. It is also higher than we saw in the first quarter. Equities, Alison was just talking about the strength there. That was reflected in trading revenue coming in at $1.89 billion, also higher quarter on quarter. So that's sort of the wrap-up story for you. FICC, a real disappointment. Equities stronger, investment banking stronger, and you have earnings beat on that line. Alison, takeaway?
Yeah, so that is not good, and we're going to want to see exactly what the shortfall was. Was there any kind of one-timers there? Sometimes you do have different gains. Was there anything episodic, is the term analysts will use, just in terms of, is there a mark that was non-recurring? Was that just bad trading results? The other two lines coming in much better than expected, so that's a positive, but I think investors are probably going to focus on that FICC.
On FICC trading, client differentiation is something that came up in the last quarter. Is it something we've got to think about now compared to the other banks and the performance of FICC trading?
It's definitely the two things that we saw in the last quarter in terms of mix. So one, the difference in clients. So Goldman does tend to have a bigger focus on things like hedge funds and active management. So we know that those are businesses that have been under pressure. Companies like Bank of America and Citi that are more focused on the corporate clients, and that's where you've seen a little bit of the strength. So there is that portion of the mix. The other part of the mix is the commodities business. Goldman is really the most committed to this business across its peers. We've seen what's happening with oil prices, and the volatility just really hasn't been there, and so that is another thing that's going to continue to impact them. I guess the one other thing I would point to is that Goldman's FICC line is a little bit cleaner than some of the other companies, just by the way that they report their businesses. So you don't necessarily have some of the same marks that might benefit any of the companies in any given quarter. So there could be some noise around that, and I think those are sort of the key fundamental differences. Still, analysts expecting, as I said, the 24% decline, and it's coming in worse than that. So again,
40% drop in FICC trading. I mean, that hurts. That's a big number.